Hey everyone, welcome back. Ready for another deep dive?
Always ready to dive in.
Awesome. So, today we're strapping on our Bitcoin goggles.
Sounds like fun.
It is, it is. We're going to be looking at this fascinating YouTube video. It's called Analyzing Bitcoin Trends Using Technical Indicators.
Oh, yeah, I've seen that one. It's got that cool AI co-host thing going on.
Right. It's pretty slick how they do that. But, charts and indicators, all that technical stuff can be a bit overwhelming.
Definitely. I mean, for someone just getting started, it can look like a secret code.
Exactly. So today, we're cracking that code, trying to figure out, where Bitcoin might be headed, both in the short term and, way down the line.
Yeah, the long game, the crystal ball stuff, right?
Exactly, exactly. Now, the video really leans into this whole technical analysis thing. Charts everywhere.
Right. Charts are like the language of the market.
Okay, I like that. Charts are the language. But sometimes it feels like I'm reading, like, ancient Sanskrit or something.
Haha. Yeah, I get that. But once you get the basics, it's amazing how much the charts can reveal.
Okay, so let's talk basics. The video keeps mentioning these Heikin Ashi candles.
Ah, yes. Those are key.
But to be honest, I still don't quite get them. What are we supposed to be seeing in those candles?
Okay, so think of Heikin Ashi candles as like a simplified version of the regular candlestick charts.
Simplified? Okay, I can get behind that.
Yeah, each candle basically tells you a story about how the price moved over a certain period, like, a day or an hour or whatever.
Yeah.
If you see a green candle, it's like a thumbs up, bullish. It means the price generally moved up during that period.
Green, good. Got it. So what about red?
Red, that's a thumbs down, a bearish signal. It means the price mostly went down during that time.
All right, so if I'm seeing a whole bunch of green candles forming, that's a good sign for Bitcoin's price, right?
You got it. It suggests an uptrend is forming. But, we can't just rely on one type of candle.
Right, right. Because the video talks about a bunch of other indicators too, like divergence signals and crossovers.
Exactly. Those are crucial too. They give us even more information about the momentum of the market. Is it speeding up? Is it slowing down? Might it be about to change direction completely?
Okay, so it's like putting together pieces of a puzzle, kind of?
Precisely. Each indicator gives you another piece of the puzzle. And the more pieces you have, the clearer the picture becomes.
Got it. Speaking of those pieces, the video mentions this thing called divergence, and they really emphasize it a lot. Can you explain that a bit more? What exactly are we talking about when we say divergence?
Sure. So divergence is when it's almost like a car revving its engine but not moving.
Okay, I can say that.
Like imagine the price of Bitcoin is going up, but then an indicator is saying, whoa, hold on, something's not right here.
Interesting.
Yeah, it's like a red flag, things might not be as strong as they look.
Okay, I'm starting to see why they emphasize divergence so much. It's like a warning sign.
Exactly. It's a signal that something might be shifting, and it might be a good time to pay extra attention.
So it's not necessarily that a crash is coming, but just be careful, be aware.
Yeah, exactly. Be more cautious, maybe reassess your strategy a bit. Now, the video also talked about a specific recent signal, a bearish signal, you remember that, a crossover event.
Right, right. They made it sound like a pretty big deal. So what's the significance of that? Why should we care about this particular crossover?
Well, looking back at history, at past market data, it seems like this kind of crossover often comes before market correction.
Correction, meaning a dip.
Exactly, a dip. Think of it like, Bitcoin is climbing a mountain, right?
Yeah.
And it takes a breather, goes down a bit before it keeps climbing.
Ah, okay, makes sense.
Right. So the video is predicting that there could be a correction, maybe lasting 1 to 3 months. So, not a huge crash, but maybe a little dip.
Got it. Okay, so we've got this crossover, might signal a correction. Now, there was another thing in the video that I have to admit kind of freaked me out a little.
Oh, yeah.
What was that?
They had these like yellow dots on the chart, and they called them rare cell signals. And they said that historically, when those dots pop up, there's been a big price drop.
Yeah, those yellow dots, those are like flashing warning signs on our roadmap.
Yeah.
They don't mean a crash is absolutely going to happen, but they're definitely something to pay attention to.
Okay, good. So I'm not the only one who thought those dots were a little scary.
No, not at all. And, they really tie into this idea of Bitcoin's cyclical nature.
Yeah.
The video talks about how Bitcoin has these bull and bear markets, and they kind of alternate.
Right, right. Bull market, prices go up, everyone's happy. Bear market, things go down, people get nervous, rinse and repeat.
Exactly. And the video suggests that we're currently in a bull market, and even though there might be a correction coming up, it might have another, 11 months to go.
Wow, 11 months. That's a pretty long time.
Hmm.
So even with this potential correction, the big picture is still looking pretty good, huh?
That's what the video's analysis seems to indicate, yeah. Amazing how much you can learn from these charts, these indicators, once you know what to look for.
Absolutely. And, this deep dive, it's just a starting point. The video has tons of resources if you want to go even deeper.
Oh, for sure. There's always more to learn.
Always. The markets are always moving, always changing.
That's the truth. Well, I don't know about you, but I feel like I've got a lot to think about now.
Me too. It's always fascinating to see what the analysis reveals,
It is. And what I keep thinking about is knowing all this now, knowing about the cycles, the indicators, the potential for a correction, how does that change how you think about Bitcoin?
That's the big question, isn't it?
It is. It is. Whether you're already investing in Bitcoin or just thinking about dipping your toes in, this information, it can really change how you approach things.
Definitely. It's all about understanding the risks and the potential rewards and making informed decisions.
Couldn't have said it better myself. All right. Well, on that note, I think we've done enough deep diving for one day.
My brain is definitely full.
Mine too. But hey, that's what we're here for, right? To learn, to explore, to figure this stuff out together. So until next time, keep those Bitcoin goggles handy, keep exploring, keep learning.
And remember, folks, do your own research.
Always good advice. All right. See you all next time.
See ya.
Welcome to today's episode. This intervention is divided into 3 points. First, we'll have AI discussing the subject we are covering today. In the second part, I'll dive into the charts with a host who will ask me questions, and I'll do my best to answer these questions and to provide to you my analysis. Finally, in the last section, I'll be talking about my services. If you're interested in working with me, I'll explain the 5 different services I offer, which range from processing my indicators with setup guidance to financial advisory and more. So stay tuned until the end for all the details. I'm just telling you that so you know that my sessions, as long as I don't change it, will be structured in 3 parts. Actually 4 parts with this one. The intro, and then the AI discussing the subjects, and then my analysis with a host, and finally I'll end with my services, the explanation of my services. So I hope you enjoy, and thank you for watching. If you don't watch until the end, I also say it at the end, but I know that some people won't watch because it's quite long. So they get impatient and they will just skip after 18 minutes or something like that. And I'll provide, of course, much more than that because I cannot talk about the markets in a couple of seconds. There's much more to say and there's much more to look at. So enjoy. Normally you should see it now.
It's loading.
Okay.
Oh, I saw it.
Great. So as you see, this is a browser and I have all the tabs open with all my charts. And we're gonna take a look at some today together. We'll see how long it goes, for 1 hour or maybe a little more. I don't know exactly. It depends on how fast we are. It would be nice if I can go through them all. So now I'm here with the brain at this tab, and I would like to go until the eye here at the end. So But if you can do everything, it doesn't matter. But I'll try to go at least through some of them with you today.
Okay.
And so normally there are 5 charts, 5 indicators on a chart. So here you see 3, and then this is 4 and 5. So that makes a lot of indicators. But I'm not going to talk about every detail. I just want to talk about some stuff that is pointing out and that I find relevant. So I guess you see that when it's green, the candles, these are Heikin Ashi candles. Normal candles look different, you will see later. When it's green, its price is rising, and when it's red, it is dropping. Okay? And here again, red, it is dropping. Okay? And green, it is rising. Here we had a reversal indication because we made a lower high, and the indicator made and the candles made a higher high. So it's actually a divergent, and that was the last big correction that lasted 200 days. But now we are green again. Anyways, you also can see the line that is going up and down. As long as it is green, it is not too bad. And when it gets red, well, then you are in a correction. But the most important thing, what I actually want to point out, is the last indicator down here. Okay?
Yeah.
And I'll put it full screen. So when you see the yellow line above the purple line, it is bullish, okay? But when you see the purple line above the yellow one, when they cross, like here, it is bearish, okay? And now why do I talk about this? It's because we just have a cross. So the cross is not confirmed until the candle closes. And the candle will close today at midnight. So when the day stops, the candle will close. But since it is already late, there's very low chance that the cross won't be valid because we are on Sunday. So normally what you see is a confirmed indication. I don't think there's any chance that the yellow line will be above the purple line before the day closes, so ends. So it's a confirmed indication. But this is a bearish sign, the cross. And if you look here, we had, for example, the cross, and we had that big correction for 200 days, because those are weekly candles. Huh? Most of the candles you see today will be weekly candles, and so when it crosses, it's actually a thing you should notice. Here, the Heikin Ashi candle don't really tell you, but it was also a long correction, and you can see it with the 2 red ones. But if you look at normal candle, it is closer. But the important thing is just that the indicator is giving a bearish sign, and that sign will confirm when the day closes. So I am listening to your questions if you have any. If not, we'll jump to the next chart.
Let's proceed now.
You want me to proceed? You don't have any questions. Okay. So this is my second chart, and I'm not going to talk long about it. It just gives you also divergence, and every indicator does. So that red line is one divergence. Here it is confirmed with the second one. Here there was also a divergence and a divergence, and here you had a bear sign. But now we don't have any divergence, so that's actually good. But this one, which could be the stochastic indicator, is also showing a cross. Okay, I don't want to add much about that chart, but I'll answer your question if you have any.
I don't have any question for now.
Okay, now this chart is interesting to me, and that's why I'm showing it to you, is because it gives you sell indications, but it gives you quite a few sell indications. But the indication that is less common is the second one, when you get a yellow dot. So it's also a sell indication, but it's much more rare. And here, for example, we had one and we dropped quite a lot afterwards. And here we had one and we dropped quite a lot. And now we have one again. So it is probable that we will drop again. I'm waiting because I would like you I'm curious to see if you have any questions about that.
I just have questions. What are you trying to sell or buy? Is that a product or anything?
We are looking at Bitcoin right now. So Bitcoin is a cryptocurrency. It's something like stocks, if you want. You know, maybe you have heard about Apple stock or Google stock or Facebook or Microsoft. It's something like this. It's something you can buy and sell. It's an investment, or it is used for trading purposes.
Okay. I get it.
Okay, great. So here we have a red candle also, and that is something we have to notice. For example, here we had the red candle and it was that correction. Okay, so once we had the red candle, I think it's also a Heikin Ashi candle on that indicator, we had a correction. Here again, we had a red candle and we had a correction because price from here to here dropped. Okay, and now again we have a red candle. So I just think that we will have a correction.
Oh.
And I want to add something that might be interesting. So the thing is, we are in a bull market, and you'll see it on every chart I'll show you on Bitcoin. And the bull market from cycle, because Bitcoin goes through cycles, bull and bear. Also stocks go for cycles, bull and bear. It's the sentiment that changes. But I don't think that the bull market is over. Because from if I look at my cycles, one day we'll take a look at them together, not today, but one day. And if I look at them, this bull market should only stop in 11 months. So next year, so we should have 11 months left of a bull market. But nothing goes up in a straight line and nothing goes down in a straight line. So there are corrections that can take take a long time. So I think we will see no all-time highs. By that I mean this high that was at 107K, so 107,755, yeah, around that number. This high will be taken out, in my opinion, but it will take some time. The correction we have now won't be very fast. I mean, it can be a fast correction, but it still, in my opinion, will take 1, 2, or maybe 3 months. I'm not expecting us to go up and to know all-time highs straight away. It will take a little time because this is there are quite a few indications that a correction is coming, and when you see those indications on a weekly chart, it takes some time.
May I know what was the candle for?
What's what?
Or what is, may I know what was the candle for and what is wet candle then?
A candle? What a candle is?
What
Is
was
that
the candle for?
This candle? There are a lot of
The yellow
candles.
candle.
There are a lot of candles on the chart. A candle is just something that where you have an open price and a close price, you know? So when you have a bearish candle, the price opened up here and it closed down here. So it dropped.
Oh.
And then it is, depending on the indicator, it will be red. When you have a bullish candle, the price opens down here and it closes up here. And on the top, you have a wick. So a wick is the line on the top and below. So when you see a wick, it shows you that the price went to that level, but it couldn't stay at that level.
Okay.
So if I can show you that candle, for example. So this candle, I don't know exactly what happened, but what I know is that it opened at this level. Okay, it also dropped up to this level, but then it went up again, maybe all the way up to here, and then it closed a little below. So it is still a little bearish, but the wick below it shows that we went low, but the lower prices could not be sustained. So buyers stepped in and started buying the asset up and pushing it up again. You know, so this is a candle. This is one candle, and it takes exactly 1 week because we are on a weekly time frame.
Okay.
Okay, thank you for that question. Okay, this chart here you have a line, and it flips between 3 colors: green, which is bullish, gray, which is in between, and red, which is bearish. Okay, so we had here again the bullish phase, but now we have a red phase. And this is the first chart that looks a little different because I actually have it on the 1 day time frame instead of the 1 week time frame. So here every candle is 1 day.
Okay.
Not 1 week. That's why it looks different. But as you see, I'm just interested in the red here. And that means it is bearish, and it will... I will think that the correction is over, that we are talking about. That price will stop dropping once from red, what we have now, we turn back to green. But because when we turn back to green, I'm expecting prices to rise again. But as long as it stays red, I'm expecting prices to drop.
Okay.
Okay, this chart I have pointed it out because here we have I'm mostly, there are 5 indicators here, but I'm mostly interested in one. At the beginning of momentum of a bullish phase, we get a red cross. Then we get some blue crosses.
Yeah.
Until we get a yellow one. When you get the yellow one, it says that the impulsive momentum has stopped. And if you can see, here it is red, so we go up. And once we get the yellow one, it stopped and we go down. Okay?
Yeah.
And I'm just saying that because here again, we have a yellow one. And that tells me that the impulsive momentum that we had and that brought us up here over 100K has now stopped. And I'm expecting it to drop. Also, this candle, which is probably also, I'm not sure that this might not be, this might be regular candles, not Heikin Ashi candles. Or maybe they're still Heikin Ashi candles. I don't know. It's an indicator, and I don't know exactly which candle they choose. Just different name of candles, they look a little different. But here, we also have a red candle, which is bearish. Here we had a red candle, and then we had a very long correction, you know? The correction lasted from here to here, and it was 200 days. And for a lot of people, it's very painful because 200 days, they think, is it over? Do we go much lower, etc.? They get very bored with an asset when for 200 days nothing happens. And then we have the huge price explosion. It doesn't look much, but when you're in the market, it changes a lot because the value of what you have just doubles, you know? And let's say you have 100 USD and suddenly you end up with 200 USD. That makes a huge difference. And it's the same in the opposite direction. When price start dropping in a bear market, so now we're just looking on a bull market, and I'll try to go back but it's a little laggy, so I don't do it too much. But you always have to backtest, look at the past. For example, here, we had a bear market. And when we start dropping, it went down a lot. So instead of your asset going up, it's like 100, you have 100 USD here, you might have only 20 or 10 left when you're down here. So it makes a huge difference, you know? That's why people are interested in a technical analysis, because you can make a lot of money, but you also lose a lot of money. And most people, since they're not professional, and they don't know anything about the market, they do the opposite that what they should do. So most people lose money, but with a very high degree. So I'm talking about the literature varies. Some say it's 92% people lose money. Some say it's 95. Some say it's 98. I say that 99. And I think it's even 99.99%. So nearly everybody loses money because it's a very hard game. It's even harder than poker. I don't know. Do you play some poker?
No, I don't play that.
You don't play poker?
Yeah.
Okay, you should.
I'm not familiar about poker.
What did you say?
I'm not familiar about that.
It's just a card game. You have never heard about poker, the card game, where people bet?
No, I don't. I don't know that.
You look it up, make a research, and it's just a hard game. I play poker also in tournaments and so on, but it's just a hard game, and it's trading is even harder than poker. And why I compare them is that in both cases we have probabilities. Because if I tell you that here we are in a correction and we go down, I expect us to go down, but it's just a probability. So how much probability chances do I have to be right? Maybe 60, maybe 70, maybe 80%. I have to be right. But there's never a certainty of 100%. So, and when I tell you, for example, that I think we go to new all-time highs, because I don't think that the bull market is over. I think we have 11 months left. That's also a probability. So here again, I think it's a higher than 50, 60, maybe 70%, but it's not 100%. Maybe that was the top and we don't see any higher prices for years to come, you know? So it's just probabilities. Now I have a question for you. Try to answer it. When you know that you can flip a coin.
Yeah.
Okay, and sometimes it lands on heads and sometimes it lands on tail.
Yeah.
Okay, what is the probability of it landing on head or tail?
Sorry, pardon.
I'm just if you throw a coin and it goes up and then it falls down, it will fall down on head or tail, on the number or the heads or tail. It can fall. It can be on either side. There are two sides and it can be on side 1 or side 2. So what is the probability? So how much chance do you have it to being on heads, and what are your chances of it being on tail?
I think it depends on how you flip it.
So you think it changes from one time to the next one?
Yeah.
Okay, but how close is it? Is it close to 80%? Is it close to 50%? Is it close to 20%? What do you think?
It's close to 50%.
Yeah, that's the correct answer. And it doesn't change how it changes if you cheat. Okay, if you make one side heavier than the other one, then it will always land on the heavier side. But if you do not cheat, okay, you always have 50% chance. Always 50%. Doesn't matter how you throw it, you always get a 50% chance.
Yeah.
So if you can bet, for example, on an outcome, you know that some people did bet on if Biden was elected or Trump, or Kamala and Trump. You know that some people did bet on the result of the American election. You know that?
Yeah.
Okay. So when you can bet on a result, on a conflict or an election, and you have 50% chance of winning or losing, do you think it's a good bet and you should do that bet?
I think it's a good risk. It's a good bet because you just try to you just try to face the risk, and yeah, it's a win-win situation.
Well, actually, it depends on the probability. It's just a question of probability. If you have a 50% probability of winning or losing, then there's no point in playing, because you will, if you do it 10,000 times, you will lose 500 USD and you will make 500 USD. At the end, the result is zero. So you just wasted your time. And there are often fees involved, so you will pay the fees and you will even lose money. So a 50% is no point in playing it. You can start betting when you have 51, 55, 60, 70, 80% chance of winning. Then you should bet, and then you should be interested. But if it's a 50% chance, you should not. And if you have only a very low percentage chance to win, like 20, 30, or 20% or 15% or 30%. If you only have a very low chance of winning, then you should not play. So what I do as a trader, I take a lot of positions. And some positions I win money and some positions I lose money. Okay? The thing is, if I look at probabilities correctly and I take probabilities that are in my favor, a risk reward that is in my favor, then over the long run, I will make money. But I have to choose my positions wisely, because I will have losing positions and winning positions. And at the end of the year, I need more winning position than losing position, because I have to make more money than I lose. If I lose more money, then I just get poor and I won't be able to pay my bills, So I need to make more money than I lose. And for that, I need to look at probabilities. And all we talked about today, all those charts are just probabilities.
Okay.
Okay, great. Okay, here you get blue candles for bullish momentum, then price goes up, and orange candle when price goes down. And now we have again an orange candle. And down here, we also have an indicator which gives you green. That's good. And price will go up. As long as we were green, price went up. We were green from here. We were green up to here. So now you see, this indicator was a little earlier. So he gave me a red candle already on this candle. He gave me a red candle, but price did go higher. That's correct. But now the last candle is orange candle. This one is an orange candle, and now we're below the closing point of this candle. So it was correct. It's not that it was totally wrong. It was just a little ahead of its time. It gave you an early warning. When I saw this red on this candle, the indicator turning red here, I knew that we were close to a top. Not just because of this candle, but because of a lot of indicators who confirmed the same thing. A lot of my indicators will confirm what I'm saying. If I have just one indicator who says something, it's not very important. But when you see a lot of indicators who say the same thing again and again and again, it is much more important. So, for example, I always told you that the last candle is bearish on all the indicators we saw. So that's a very heavy, that's something that has a lot of weight, because a lot of indicators confirm that. If it would be only one, then it wouldn't be that important.
Okay.
Okay, here we have green. Green is when on the last indicator. When you have green, it is a good sign, but you should not have any red. So here we had green and no red, and then price exploded up to here until you get a yellow dot. Okay, and here again we have green and price exploded. But now we see the first red. And for example, here we did get red and price dropped, as you can see. And here also we did get red and price dropped. So this little red thing here that doesn't seem too much right now is still something you should be aware. So this indicator again confirms that something is happening, and the bullish momentum, which you can see the momentum, you can see it here with the green, has stopped. That's what the red says. The red says be careful, the momentum might be over. Because now we still have some green, so we still have some bullish momentum left. But next week, so in less than something like 15 hours when the day closes, or that green might be gone, and you will have nothing on the bottom. You will have just white. And on top, you will have only red, which is a bearish sign. So you should be a little careful right now. And don't think that we go straight away to new all-time highs. We are in a correction, and the correction will be over. So I'm expecting white. Then I'm expecting some red. It doesn't have to be a lot of red, but it has to be a couple of weeks at least. And then I'm expecting some green to come back. And when the green comes back, we will go again to all-time highs, in my opinion.
Okay.
Okay, here I'm interested mostly in the short sign. So it tells me to go short, and this actually is quite important. It's very hard to go back because when I'm also talking to you, it is laggy. But maybe I can see and find one more short to here you had shorts, you see? And it was the last bull market top. After that, we had one more wave that brought us a little higher, but we then got lower. So the short here was at actually the end of the bull market. So this is very concerning because the last time we get the short indication on this indicator, it was the end. We did not go to, we did go to new all-time highs, but it was very short-lived and we didn't go really higher. We just put our head above water, but then we dived lower. So this short indication that I see right now, and that will be confirmed tonight, is actually concerning because that there's a probability that it is giving you the top of the bull market. So there's a probability that we might not go higher, but it's just one indicator. So I cannot just trust 100% this indicator, but it is concerning to see this short indication here. It is concerning. This here was the bottom of the last bear market, the lowest price, and this candle we are talking about right now was the highest price. And there's a lot of difference, hundreds of % difference between the low and the high. And just to tell you, there was not one single short in. And the last time I saw a short was at the top of the bull market. So this is concerning. So I told you that I believe we go to new all-time highs because I believe from a cycle point of view that the cycle is not over and that there's 11 months left. Okay? But that's just a belief, I might be wrong. And this indicator screams at me, you are wrong. We are at the top, we won't go higher. That's what the indicator says. But no indicator works 100%. And as you see, the price did move a little because we just went a little higher and the short did disappear. So we have to see how it closes because right now it's gone. The thing I was talking about is gone. So that's the thing. While the candle is not close, the signal is not definitive. Every signal you get are only definitive, won't change once the candle is closed. And this candle is still open. So things can still happen. And here it comes back. And now it's gone again, as you see. So So I think that's quite interesting. What do you think?
Yeah, it's interesting.
Because we always have to adapt. I cannot just have a preconceived idea and go with it until the end of time, because things changes. You know, the indication, the short is back again, but then it disappears again. So there's a lot that can change. And if the candle goes higher and we don't get that short sign, well, then there's less danger. But I still believe that price will drop, and I still believe that we are in a correction, because we until now we have seen a lot of indicators who told us that we will go lower.
Yeah.
Okay, I'm not going to talk about this one. Here, I'm interested in that indicator, which gives me a red, which is bearish. And here, the last time we had a red was, then we started the big correction from here to here. And only then we went higher, 200 days. And here also we had a red. This was a little earlier, too early. But this was a wrong signal. But this one was quite accurate, because it also gave a sideways movement for a long time. Here we had red and we dropped. So the last 3 candles were red. This candle was red and we went a little higher. And this candle is red and we also went a little higher, because the wick went a little higher. But they all tell you that you should be careful, because it's not green anymore. As long as it's green, it's smooth sailing. You have no worries. Everything is nice. The weather is nice. Price go up. But once you get the red, you should be careful.
Yeah.
Okay, here you see the same thing. And the line you see is a MACD. And the MACD is dropping. But I liked a lot the MACD, because it gave me higher highs and lower lows. As long as it makes a higher high, this is one top, but we made a higher high. This top went higher, so it's good. Here we have a low and a lower low, but now we had a higher low. So higher top, higher low, higher top, higher low, higher top, higher low, higher top. And now we're sitting, and now this time it is not a higher low. This time it's at the same level, actually. And this level makes a line, actually. If I put it here, you can see a line at 34, 620. So you see a horizontal line. And this so it is dropping, but since there was a higher low, it does some resistance. So it's a little hard for it to drop even more from here. But the dropping is not a good sign. Also, you see that if we keep dropping, we will turn orange. And that will even confirm that we go lower. But now we don't have the orange, but it still dropped a lot. And those last 3 candles here were purple, which is also bearish.
What was MACD mean?
MACD means something like moving average, convergence, and divergence. So it's a technical term. It's a technical term for that indicator. Like stochastic, RSI, all those terms are just technical. They just tell you when you say to a trader a MACD, he knows what a MACD is because he has used it a lot. No, it's like what can I compare it to? It's hard for me to find a good comparison. I wanted to compare to a car and some stuff in a car, but it's a little hard to say. It's maybe a plane. In a plane, you have a lot of buttons, but all the buttons do something. Okay, and every button has a name. So when a pilot talks about one button, everybody knows what button they talk about. And that's the same with indicators. They also have all names.
Okay.
Okay, here, this is a snake indicator, and it goes from green to red. And when it goes red, it is a bearish sign. And now, as you see, we are turning red. We were green for a long time, but now we are turning red. And the second indicator is called a banker indicator, and it is turning orange. And if you go back, here we had orange, and we had a sideways correction that was quite long. Here you don't see the orange, but this candle was probably orange, and this one is red. Red is even worse than orange. And we had a huge correction. Then green, we had a nice bull run, and now orange. So we are looking, I'm expecting a correction again.
What does blue candle mean again? Is that a candle?
Yeah, it's a representation of a candle down here. Yeah, it is. It is actually a real candle. Is this because it has opening price and a close price? This is just not a candle. There's a name. It's not a line. It's a diagram or something like this. I don't have the name in my head, but I can look it up for next time. But it represents a candle. It represents just the bullish or bearishness of a candle. For example, here, this is a candle, yeah? And we were quite high. So you could expect us to go to 100K straight away from 60K. But instead of that, we went, this candle, the next candle. Let me go to the next one. Yeah, this candle. We were quite high. And you could expect us to go straight to 70K. But since it's not green, this one is blue. You ask about the blue one, okay? So blue means that it's a change of trend, actually. So green means we go up, okay? Orange means you should be careful. Something is changing. Green says we are still good, we go up. Then red says we are going down. And blue might tell you that red is over, we go through blue, and then we go to green. So it's just different phases of the candle. For example, here we had a red candle, okay? And it was the lowest red candle that we had. And then we get a blue that is a little higher. And it was the start of the trend. So the trend started actually at this one, with this blue candle, because we went then higher. The blue turned into green, and it was smooth sailing, very beautiful weather, everything was rosy, very, very nice. But now again we get orange, and it's a warning sign. So the blue is just a change of trend. Here we had red and blue. So that could be a change of trend. That means the next candle could have been green, but instead of green, we did get one more red candle, and then a second red candle, and then only we did get a blue candle. But that blue candle was a very nice moment to go long. If you would have gone long here, it would have been a perfect entry, and now you could exit your position and take some profit since we have an orange candle. Does that answer your question?
Yeah.
Great. Okay, this indicator is interesting to me because when we get a red dot here, we get a red candle. Here we have a red dot and we get a red candle. Here we have a red dot and we get a red candle. And here again we have a red dot and we get a red candle. And as you see, every time we get a red candle, so the red dot, we went lower. Here we get the red candle. Okay, we did go a little higher, but it was not sustainable, and then we did get lower. Okay, a red candle, and we started a huge correction of 200 days. And here again, a red candle, and I'm expecting us to go lower. Also, the line goes from blue to orange. Orange is bearish, we go lower, and blue is bullish, we go higher. So here we are blue for a long time, but as you can see right now, we are again orange. So to me, the red candle is important. and I'm expecting it to have some weight. So I'm not expecting us to go higher straight away. I'm expecting us to have a correction and go lower in that correction. I don't think here the wick at 92, around 92, I don't think that was the low of that correction. I think we go lower. I would not be surprised if we go below 90K. I don't know exactly how low we will go, but I think we go lower. So here I just want to say, to show the red dots. Here we had a red dot. It was also on that candle, so a little early, but it told you that a correction is coming. Here we had a red dot, and the correction was coming. Here we had a red dot, and the correction came. Here we had a red dot, and price dropped. Here we had a red dot, and price up. So now we have a red dot, and I'm expecting us to go lower. Any questions?
I just noticed what was that HH and LH means.
H and H means higher high. Okay, it's a higher point. So as you see, this was that high, and then you get the red dots because it puts the red dots at the high. Okay, and here you made a higher high, so it makes one more red dots. So as long as you see the green, the higher highs and the higher lows, it is the definition of a bull trend. Higher highs and higher lows is the definition of a bull trend. But when you get lower highs, which means we did not go as high as this high, we tried, but we could not manage to go that high. So we get a lower high. And here we did get a lower low because we did go lower than this one. There's a line with the blue dots, and we did go lower than that one. So it makes a lower low. And here again, we tried again to go higher, but we could not even go higher than the lower high. So we made one more lower low. And here we made again, lower high. We made one more lower high. And here we made again one lower low, since we did go lower than this low. Okay? And so that was concerning. When we had those lower highs and lower lows and lower highs and one more lower low, it was concerning because we could have made one more lower high here and then even lower and start and continue the bear trend. But that says that in this bull market we had one bear correction. So bull is green and red is bear. In this bull market we had one real bearish correction. Okay, but it's an important thing to look at, the higher highs and lower highs. It's an important thing to look at for a trader.
What would you do to make it high?
So here we have a higher high because this will be a higher high. It will just take some time for the indicator to show us. Maybe tomorrow there will be a higher high here. It depends, but it depends how long it takes him to put a higher high on the chart, because it is a mathematical thing, and there are equations who tell you when to put the higher high. So it will take some time, but right now I'm expecting us, in the next time I see you, I expect us to have a higher high here because we went higher. So I expect us to see a higher high. And then I expect us to make a higher low somewhere. So where can the higher low be? So as you see, there are different lines. This one is a very bullish line that goes very high, and then you have a green line, a white line, and a green line. So if you look at that trend, at those three lines, so we could go low to, for example, because they are support, we could go to 83, 537. So we could go to that level. And once we reach that level, the support holds and we go higher. So that's possible. So that would be a good place for higher low. And then we make new highs. We go to new all-time highs. So does that answer the question, or did I understand you wrong?
I understand what you're saying naman.
Okay. So I still have a couple of charts left. I don't know if you can do all of them, but I'll try to do a couple of them. Maybe you were quite fast, and then we can call it a day. Okay. But we are already talking for 1 hour now, and normally it's between 45 minutes and 1.5 hours. So we still have some time left, but I'm just telling you that that there's still a couple of charts left. We have done, but it shouldn't be too long, I think. So here we have a red dot, and that's an indication that we drop. Also, the line goes down, and the candles, the diagram gets lower and lower. And when it turns red, well, it's the definition of a bear. But as you can see, for example, this red dot, and we went lower. This red dot here, we went lower. This red dot, we went lower. This red dot, we went. This red dot, this was a mistake. So there are a couple of mistakes. So here we had a red dot, but we did not go lower. And there's one more that I can show you like this. Here also we had a red dot and we didn't go lower. So at the beginning of a bull trend, sometimes we get a red dot and we don't go lower. But later on in a bull trend, when you get a red dot, we go lower. So here also it's later and we get a red dot, we go lower. Here it's again the beginning and it wasn't confirmed. And here it wasn't confirmed. But this one is confirmed. And what is even better is the purple dots. So the purple dots tell you to go lower. But this one was correct. 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 In this bull market, all the purple dots were correct. 100%. It worked 100%. It worked every time. And now we have again a purple dot. So I'm expecting us to go lower. This is an indicator. The last three is the same indicator. I just changed the parameters. So I changed the numbers to make it more aggressive. And the first one is the least aggressive, and the last one is the most aggressive. And red is a very bearish sign. Blue says be cautious, and green is still bullish. So we didn't have on the top one, we didn't have a blue for now. Okay, so it's still early in the correction, but here we also already have a blue, and here we already have a red. So I'm expecting us to go lower. Okay. This indicator is interesting. So you see it here on the 2 week. Every candle is 2 weeks, and here on the 1 week, every candle is 1 week. And I only want you to focus on the crosses. So the crosses are important levels in the market. Okay. Here we had the crosses, and was the end of the last bull market, and we went lower. Okay. Here we had a cross, but it wasn't the end. We managed to go lower higher, but we still had a huge correction of 200 days. Okay, so this is quite important. Now I will just focus on the 1 week chart, and on the 1 week chart we have 2 crosses already. Okay, so since we have already 2 crosses, it's also a warning that we go lower. It's a warning that something is changing. And we should be careful. And that's the second time we get it in this bull market. And normally we don't get them too much. So actually getting it twice is quite dangerous. So it could be the top. Maybe we won't see a new all-time highs. This indicator puts some doubts into that perspective. And as you can see, here you have percentages. And they are from the last moment. So here we were at 27,995, okay, thousand. And on this candle, we made 24%. Here we made 74%. Here we made 144%, okay? And here again, we have 63,563, okay? And here we have like 8.57, and here we have 54.19% on that candle. So it's just, but the most important thing, and it's the same, now we get all the orange percentages. And as you can get, as long as you get the orange, it's bullish. But in a bear market, it's the opposite. You get a purple. Let me go back. Here you see all the purple one. You see, because it was a bear market, and the purple one is the price who keeps dropping. So that's just the difference between a bull market and a bear market.
Okay.
But to me, the crosses are important. That's why I showed you that chart. And we again have crosses. So we should worry again. Okay, let's go. Let's see if we can finish. Here we have a red one, which is a sign of a bear market. So let me just focus on this one. Let's forget the other one. Red, we go low. Red, we go lower. Red, we go lower. Red, we go lower. Red, I'm expecting us to go lower. Okay, here's an indicator. I think it's an RSI, and it gives you numbers 82, 80, 87. Okay, and in a bear market, it gives you green numbers 20, 26, 29, 29. So when you get the green ones, you are close to a bottom. Okay, but when you get the red ones, you get closer to a top. So 80. How much are we now? 80, even higher. 83, or how much are we? 82. 82, so that's quite high. So it's not the same thing. So it's better to buy when you get, when you are around 25, 29. It's much better to buy than when you are at 80. 80 is a sign that we were very close to a top. Here, you see the red phases, which are bearish, and the green phases, which are bullish. And right now we are in a red phase. So before price can go any higher, we have to see a green phase starting like here. Okay, and now we don't have that. So I'm not expecting us to go higher, straight away. All here, I want you to see the lines, purple lines. They are all support, because in trading you have support and resistance. Okay, so this was resistance because we were below and we had to go above the purple line. But and since we managed to go above the purple line, we have now support. And when we drop, if we drop that low, here price will stop dropping because we have support. That doesn't mean that the bear market is over. It just means that you have support. Okay. For example, if you want to go, if on this candle you want to go long, so you want to buy and sell once you're up here, you will put a stop loss at this line because it is support. You know, this purple line. I just wanted to show you that. We are nearly done. Then. A couple more charts and we are done. Here, the interesting thing is that we have a sell signal, the triangle, with an S on top, and a red candle, which is both bearish. And here the line turned red, which is also bearish. Okay, 3 more charts and we are done. Okay, and this indicator, when it is orange, it is bullish, and it was nearly all the time orange. And when it is purple, it is bearish. And now we are bullish. And one more. Here we have a red candle, which is bearish. And good moments to buy is when this indicator is red, and here it is red. But now it's not red, so it's not a great moment to buy. And the last chart is this one. We have here selling indicators. The dot is a sell indication, and we had a sell indication. And here we managed to have the red line on top of the green red, so we should go lower. Okay, this is all I actually want to say, and I have to go to the bathroom, so I have to stop. Do you have any questions, or can we stop here? Because I really have to go to the bathroom.
Okay, you can go now.
Okay, thank you a lot, and see you soon. Bye bye.
Thank you.
It was nice talking to you. Bye bye. I want to explain to you why it is important to talk with a financial advisor or a trader, to have somebody who assists you during your journey. I think it's important for everybody, even for experienced traders. Just as I also play poker, it is nice to have a poker coach. And I think in the market it's also nice to have some advice. So I want to explain to you why this is important. In order to do that, we will listen to a small text that I have written where I explain to you the issues with the market and why it is difficult for most people. So to do that, we will listen to it together. I have written it and we will just listen it together. It won't be long.
The reality of the market is that 95 to 98% of people lose money, and this is not just limited to beginners. Even institutional traders, who have vast resources and experience, face losses. In my view, the true figure is closer to 99.99% of people who ultimately lose money. I have seen this firsthand, countless individuals, including those I know personally, who repeatedly lose their savings in the markets. To change this pattern, you need to work with a financial advisor or trader who truly understands what they are doing, or you must commit to learning it on your own. I'm able to trade successfully today because I've spent decades researching and honing my skills. Like everyone else at the start, I lost money, but I refused to give up. My secret is working 17 hours a day, always analyzing charts and taking positions. I've taken over 10,000 positions, and as long as the markets are open, I'm constantly engaged. This level of dedication is what has made me a better trader. Now, while I cannot promise that you will make money, what I can confidently say is that all of my clients so far have made money and are extremely happy with the guidance I provide. Some of my clients meet with me weekly, and they are genuinely satisfied with our work together. I've helped individuals, including those over 65 years old who have never invested before, to start their journey in the markets. They learn, grow, and make money, and they're very pleased with the results. That being said, I want to be clear that success in the market is not guaranteed. Psychological factors can play a significant role, and some may struggle to trust the process or fully understand the principles behind the strategies. It can be challenging to execute the actions I recommend and to build the mindset necessary to grasp the probabilities involved. However, based on my track record with my clients, I believe success is possible. It largely depends on your mindset and willingness to adapt. I've seen it work with my clients, and I believe it could work for you too if you're ready to commit and trust the process. So, I encourage you to reconsider your approach. Instead of losing your money the same way most others do, think carefully about the value of working with someone who can guide you to make smarter, more informed decisions.
Okay, now that you have listened to that, I would like you to take, I would like us to take a look at my services. So I have different services. This is an exclusive offer for only my subscribers. So I will go through that offer with you now and explain it in a couple of words. It shouldn't be too long too. So this is a breakdown of my services from least expensive to most expensive. So we start with an indicator bundle. In that service, you can select between 5 to 10 indicators. It will cost you 150 USD per setup. So if you see an indicator that you would have to have on your charts, I will explain to you how to get it, how to set it up, how to make the parameters correctly. I'll do that with you together, and I'll make sure that you can use them. You can tell me which indicators you want. Normally it's between 5 to 10. Now, if you only want one indicator, then I'll make the setup for only one indicator, but it will still cost you 150. If you want to have my indicators with my settings, with my parameters, then you'll have to buy the indicator bundle. The second service I offer is crypto teaching. Here I will teach you how to buy, sell, and store any crypto. A brand new coin or an altcoin. I even tell you how to find brand new coins. Coins that only exist for 12 hours if you're interested in that. Or more reputable cryptocurrencies. I will tell you just how to buy them and store them. I will help navigate the crypto market from a technical point of view. So this intervention will cost you 250 USD per lesson. So if you want me to help you do that, to help you buy and store a crypto, you need you need some crypto teaching help, then I'll do that from a technical point of view. Now, my third, and that's the most popular of my services, it's the financial advisor. It will offer you personalized financial advice. So I always also look at who you are, how old you are, and what strategy we can use at your age, and what is the best strategy for you. It depends on how much risk you want to take. So I will explain to you the risk of the different strategies and what you can expect of them. So this is the personal financial advice. As your financial advisor, I will guide you through every step of your investment journey, primarily focusing on cryptocurrencies, but also offering support for stocks if you're interested. I'll help you determine the right times to buy and sell, implement effective trading strategy to scale in and out, and manage risk properly. Additionally, I will assist you with practical aspect of your investment journey, such as selecting the best exchanges, choosing the right hardware wallets, and ensuring your investments are well structured from a technical financial perspective. So this is my most popular services. Most of my people are only interested in having me as a financial advisor. This will cost you 500 USD per session. Here I wrote per session, but actually it's not that. It includes 2 to 5 interventions yearly interventions. So we will meet normally 2 to 5 times, but I ask 500 USD in advance. So you have to pay 500 USD in advance, and then I will meet you if you're interested 5 times. But if you, after one lesson, you say I'm not interested anymore, you still have to pay 500 USD. Okay, it is 500 USD for that service, and that service includes 2 to 5 intervention yearly. So why 2 to 5? It depends on the people. Some people need more help. Other people are happy with 1 intervention a year. Some people want to see me even much more than that. If you want to see me much more than that, it is not included in that financial advisor service. That's a strict minimum for financial advising. And normally it should be every 6 months. So that's why I said 2 to 5. 5 if you need more help, because it might not be enough 2 lessons every 6 months. It depends on you. So I cannot say that before we have met. But it will cost you to have me as a financial advisor. It will cost you 500 USD a year. And you're supposed, as long as you want to be invested in the market and take proper decisions in the market and make and make proper risk management in the market and understand what you're doing instead of just losing money. If you want to do that, well, then you should renew that subscription every year so that we can keep working together. So it will cost you 500 and we'll meet normally twice, up to 5 times a year. Why up to 5? Why it's not an exact number? Because it depends. It depends also. If it's really painful to work with you, then I'm not too much interested in seeing you 5 times. But if it's pleasant, interesting to work with you, then and you're respectful and then it's a different story. Then I don't mind seeing you 5 times a year. So it's between 2 and 5 interventions a year, and you should renew the subscription every year, as long as you want to have a financial advisor, which is really recommended. And 500 is really, really cheap to have a financial advisor. So it's the best service thinkable, and that's why it's so popular. And the last one is the trading mentorship. So this is full trading guidance and support, up to 1 session a week for 12 months. And the cost here is 2,500 USD per year. So we work together. During an entire year, we discuss what you're doing, why you're doing it, which indicators you use, on what time frame you talk. We will review your trades. So it's a trading mentorship. So the idea is that your chances of one day being a successful trader, no, don't expect that happens from one day to the next. It takes years. It takes a lot of work and a lot of dedication. But it is better to do that than to use your entire capital. So I know a lot of people who have lost 100K and more by just doing stupid things in the markets. Just taking a short position and in a bear market and thinking it will just go down. But then there was a small bear market rally and they lost more than 100K in 1 or 2 weeks, or maybe even for 4 days. So I know a lot of people who did really, really stupid mistake. Instead of blowing 100K, you should think you should start working and start making proper risk management. And then one day you will be a successful trader. I'll make the process faster, but it will still be a lot of work. Nobody becomes a successful poker player from one day to the next. Now, taking lessons and working makes it better and makes it easier. It makes it faster. Instead of taking a decade, you maybe only need a couple of years. And when I talk a decade, I talk about somebody like me who is engaged in the market 17 hours a day. So then it's a decade. But if you have a financial advisor, we can make it easier for you and faster. But it will still take work. You don't think that you become a trader or a professional poker player from one day to the next. Don't think you just have to pay 2.5K and then you are a professional trader. It is harder than that. Okay. So, but your chances are much higher and it will be much faster. So it's up to you. How many years can you spend? Can you spend the next 20 or 30 years working on your skills, or do you want to be faster? If you want to be faster, then this is what you have to take, the trading mentorship. And it will cost you 2.5K per year, every year. And you will get 1 session per week for 12 months. Okay. And you have to pay an advance. So you have to pay the 2.5K for a year of service, and then we work together. Why do you have to pay in advance? Because if not, people change their mind. They see that it's hard and everything, and then after 1 session, they stop. And I'm not interested in that. I'm not interested in wasting my time. By wasting, I mean, it's hard work. It's a lot of time that I will put into it. I will take a lot of time talking to you, reviewing your hands and all that. And if you're not interested, and if you cannot even spend 2.5K, then you should not be doing that. Then you don't have the capital necessary to be in a trader in the first K. 2.5K for what I'm offering is beyond what you will ever find on the internet. Nobody would offer that kind of service for such a low amount. Nobody, never. If they do, they know nothing about the markets, okay? So I can guarantee you that that's the cheapest service. Also, those offers that you see now, those 5 offers, starting from 150 USD to 2.5K, that's an offer that I do right now, okay? In 6 months, it might be different. The prices might have risen. It all depends on my disponibility and how much I want to work with people and how many clients I get. But those prices are just valid as long as you see them. Okay. In 1 year or 5 years, the prices might be totally different. But right now, that's the prices you have, and that's the prices you get. So each lesson or session typically lasts between 45 minutes and 1.5 hours. So here again, I cannot give you an entire amount, but it depends on what. But it usually is between 45 minutes and 1.5 hours. That's usually the time I spend with my clients when I assist them. Okay. To ensure a fair and effective process, I require all payments to be made in advance before I can provide my service. This approach helps avoid the risk of non-payment, as experience has shown that many clients may not fulfill their payment commitments if the services is delivered upfront. So I cannot deliver upfront. I don't know anybody who can, but I cannot, okay? Because I have no money to go in front of a judge and ask, I have no time to go in front. It's not that I have no money, it's just that I have no time to go in front of a judge and ask you to pay the money and use violence against you to get the money out of your bank account. That's not something I can do, you know? So, and that's not something I want to do. Even if I could, I do not want to do that. I'm a philosopher. I have written 3 philosophic books. I'm in the process of publishing my 4th philosophic book. Okay, I believe in honesty and in people acting. And my definition of honest is if people act spontaneously and are not obliged to it. So I don't believe in slavery. So I want you to be free of choosing my service if you're interested in not and leaving it. And if you don't want to work with me or you don't trust me, I understand that. And then it's not for you. It's just a simple thing. What I can say is that it's not my first time that I offer trading advice. I had a channel where I offered 8-wave analysis, and people subscribed for an entire year, and I delivered up to the last day of the year. So I delivered up to the last day, even though they paid in advance. So if I would have want to scam them, of course I could, but that was never my intent. The only people who scam other people are people who have nothing to offer. So since they have nothing to offer, since they know nothing, the only thing they can do is scam people. That's why they are scamming. Okay, I have a lot to offer to my friends, to my clients. I have a lot to offer, and I'm not interested at all in scamming people. I like to talk about the markets and I like to share my passion, but I'm not interested in scamming. That will get me nowhere. Okay, there's no point in doing that. So payments are usually made in Bitcoin, and the payment address is the same one as for the donation address to Quick Learn. AI makes you smarter YouTube channel. Okay. And if you have any question, if that isn't clear enough for you and you have any questions, you can also write an email to Quick Learn reviews, sponsor and ads at Gmail. So the email address of Quick Learn. That will be that I will see that. If it's serious, I will see it and then I will answer you. Okay. And for the payments, the Bitcoins, it's the same address, but you have the on-chain Bitcoin address and the Lightning Network address. And if you need a different way of payment because you cannot use Bitcoin, then also write Quick Learn reviews, sponsors at gmail.com, the email address. You know. So that's it. I hope I was clear. And I hope that helps you. And if you are interested in the indicator bundle, the crypto teaching, the financial advisor, or the trading mentorship, then let me know. And I would be looking forward to meet you and glad to work with you because I really enjoy the markets and I really enjoy sharing my passions. And I'm always really happy when my clients grow. And for example, for the financial advisor, make money. It makes me really happy if I could help somebody. I find it's a great thing when you can meet somebody and that person is not just talking, but can make you money. That's so rare, and it's so hard to find. I've never found it. All the people I know, they only cost me money, but they're incapable of making me one single USD. And I find it extraordinary. It's like a genie in a bottle that you can find somebody who actually makes you money, really, really makes you money. And you make much more money by listening to him and working with him than doing anything else. I find that extraordinary. And that's not a fiction. You don't need to find a genie in a bottle. Those people really exist, but they're extremely rare. So you are lucky because you find me at a stage where I don't have too much clients, and I still can accept a couple of them. So if somebody is interested, let me know, and I'll be glad to meet you. Thanks for watching, and see you soon. Bye bye.